Hello, friends, and wish you a very happy and prosperous new year ahead. So, as we end 2023, we see that it has been a very good year, contrary to what it had started with a lot of inflationary expectations, central banks hiking rates, and a lot of geopolitical tensions. As the year moved by, we saw all of these tensions getting eased off, and as a result of that, equity became the best performing asset class for 2023. If we talk of India, Indian equity market has done far better than many of the global equity markets in 2023, and mainly it was contributed by a robust growth in economy, which was because of good domestic demand as well as good government policies, which led to the expansion of businesses, ease of doing business, and that overall helped the economy. Second, what we saw was the margins which were compressed in 2022 because of high inflation and things like that started normalizing in 2023. So the margin normalization along with some modest growth resulted in high profitability, and which was rewarded by the markets, especially in the small cap, because the small cap saw the largest margin depression in 2022. So that normalization resulted in small caps outperforming. Lastly, we saw a robust domestic flows. Though the FIS flows were also positive, but the domestic were dominant flows, and which helped the markets. Now, if we talk of 2024, after a good period of margins normalization, which resulted in multiple normalization, the scope of any of these things happening in 2024 is low. But economy is in good shape. We are expecting it to grow by over 7%, or at least somewhere close to 7%, which should translate to good earnings growth, because historically it has been seen that the nominal GDP growth rate can translate to earnings growth over the period of time. Inflation, any which ways, has moderated, and which has also eased off the pressure from the central banks to hike rates, which makes fixed income an attractive asset class to look at in 2024, and with the possibility of rate cuts coming in. We can see fixed income overall doing quite well, though the growth and the inflation expectations are quite balanced. So the rate cut may not be immediate, but it could be pushed towards the fag end of the year. But certainly we have started moving towards that side. With interest rate moderating, obviously margins should remain stable, growth should support that. And with that, we look at mid, small, and large cap as a category. We found them. We see that they are quite rightly priced, and going forward, it will be the revenue growth which will drive going forward, and which should get supported with good nominal GDP growth going ahead. So with this, we look at a decent year going ahead. Not as good as 2023, but certainly much above the average. The only risk is that 2024 is an election year, with almost 40 countries globally going for election, which may change the geopolitical situation globally. Also, with the rate hikes which we have seen in recent past, are expected to take some toll on the growth, and there is expectation of some recessionary environment building in. that could have some impacts on the market. But for these two, I think all other things, especially for Indian markets, looks quite optimistic. And with that optimistic note, thank you very much. Look forward to see you again next month.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.